Merry Christmas to everybody. In this video, I want to talk about Tesla. So if you look at the chart of Tesla, it peaked November 5th, 2021. And since then, it's down 70%, right? Lots of stocks are down that amount. But this is the darling of the darlings, right? And as you know, I haven't ever been positive on the stock, even though, I like the car. But something interesting is happening right now because, if you think about the situation, Tesla had a $1 trillion market cap, right? And you heard the bulls, it's going to have 10 trillion. It's going to produce this many cars. The optimism was just like on Bitcoin. It's going to go to 1 million. And you see, the interesting thing about what's happening right now is that, look, the car manufacturing business is not a great business to begin with. It's not, right? And Tesla has the best margins in the business, right? So bulls were saying, well, it has the best margins in the business. It's going at 50% per year. It's going to produce 10 million cars, la, la, la. So they take whatever is happening right now and they just project it into the future. And then they assign it valuation that is higher than all of the auto manufacturers combined, right? They didn't think there was anything wrong with that. And now, recently, Elon Musk was talking about offering discounts in order to continue growing. And then as a result of this, profits are going to be minimal or even negative. And so let's think about it for a second. Tesla's margins are the greatest, right? And why is that? Well, first of all, who's buying Teslas in the first place? Like, not the average Joe, right? It's people with money. So the reason why Tesla is able to have good margins today is because they're selling cars it's a luxury car manufacturer, right? They're selling cars at an expensive price, right? And Toyota or Honda can't do that because they are selling cars to the average Joe, right? So it's no wonder that margins for these guys are lower, right? So then now going into the future, if people are saying, well, they're going to sell 10 million cars. Okay, like Toyota or Honda, right? Okay, so in order to sell 10 million cars per year, do you think you're going to be able to maintain those margins? Probably not. Probably you're going to have to lower the price, which means your margins are going to be lower. The quality of your revenue stream is going to be lower if you want to sell it to the average guy, right? Well, the bulls didn't want to hear that. Okay. Now, what about the marketing? Well, because of so much, social media presence and so much talk about Elon Musk and Tesla didn't really have to spend any money on marketing. Okay. Now, do you think that's sustainable? Do you think that they will never have to spend any money on marketing? That people will always be buying these cars because, right? I don't think that's realistic to think that they're never going to have to spend money on marketing, especially when the competition will come in and it's going to get harder and less profitable for Tesla to sell cars in the future. I think that's a realistic thing to say. So what does that mean? Well, it means that even at today's price, almost I'm looking at, 400 billion market cap, you can still argue that it's 80% overvalued even at this price, right? So because when you have a stock that is not only priced for perfection, but is priced for fantasy, like, I mean, is it any surprise that the stock is down, 70%? And you see, this is another thing. People come in and they can't tell the difference, okay? They can't tell the difference between two stocks being down 70%. You see, if one stock was 10x overpriced and went down 70%, that's a completely different story than another stock, for example, being reasonably priced or undervalued and became even cheaper, right? Because some stocks, when they go down 70%, they become better buys. Some other stocks that go down 70%, they don't necessarily become better buys if they were in the bubble to begin with, right? So it will be interesting to watch because now the growth story is in question. We'll see. But like from my point of view, I wouldn't touch it. I wouldn't touch it for today's price. I wouldn't touch it for $100. I wouldn't touch it for $50. Maybe at $20 would start to get interesting. But it's just never this stock is never interesting to me because first of all, the business is average. I don't like the business to begin with. Second of all, I always look at price versus value. How much value am I getting for the money that I'm spending? I always look at that. And because this company is on everybody's radar screen and it's so popular, I can't ever get the price to value ratio even comparable to what I can get somewhere else. But it will be interesting to watch. So that's it for this video, and Merry Christmas.